Hi, Paul Gerard again, welcome back. Today we're going to talk about how non-residents are taxed on their income in Australia. Non-residents are taxed very differently. It's important to understand the differences so that you don't mistakenly over-declare or under-declare income. As a non-resident, you'll pay Australian income tax only on Australian sourced income and not all forms of income. What do I mean by that? Okay, if you have Australian source income, you're taxed on, for example, whatever it might be, let's say rental income, and less your deductions, not a problem. But it's important to understand that there are some forms of income that are not subject to tax. So let's discuss what they are and how they are to be taxed. Firstly, bank interest. Bank interest is not subject to income tax. Instead, the system works this way. You let the bank know you're a non-resident. The bank will withhold withholding tax. That's all you need to do. If that's what you've done and it equals the relevant amount for the full year, we then don't include the interest in your tax return, and that's full and final, okay? But let's say you didn't tell the bank, then we would include that income in your interest section of your tax return, and the tax office will separately issue a withholding tax notice. So they'll ask for their 10% of the tax attributable to interest. You'll pay that as a separate notice compared to your income tax. Dividend income is much the same with an exception. With dividends, you have two components, franked, unfranked. The unfranked is subject to withholding tax, 15%. The franked element is subject to no withholding, but you lose the franking credits, okay? So we can't include those dividends in your tax return, but if you have not had the relevant amount of withholding on your unfranked, we then include them in the tax return, and again, it goes on your withholding tax notice, not your notice of assessment. Is that clear as mud? That's pretty much income, except for capital gains and how non-residents are taxed on capital gains. Now, non-residents do not pay capital gains tax on sale of listed Australian shares, okay? So if you own shares in BHP, you don't need to declare those, and you pay no Australian capital gains tax on those. But if you sold property, yes, that is taxable. Or if you sold, let's say, New Zealand shares that you owned, you wouldn't report them in an Australian tax return. But let's say they're private company shares in Australia, yes, we'd need to know about that. So hope that clears up some misconceptions about how non-residents are taxed. It's important too to remember that if you've got a Australian sourced Australian investment property or investment properties, you definitely do need to prepare and lodge an income tax return. And also bear in mind the new New South Wales, Victoria and other state surcharges, land tax surcharges and things like that, which are evolving so that more and more people are getting caught by them. If you don't know what I'm talking about, check out one of our other videos dealing with land tax surcharges, which will follow at a later date, or give us a call. Happy to guide you and make sure that you're not missing any of your obligations there. Anytime, give us a call or give us an email. More than happy to help you, and we'll see you on another one of our videos another time. Cheers, bye.